Most Americans think the next financial crisis will look like 2008. Banks collapsing, markets crashing, panic on TV. That's the first mistake, because the shock that's coming won't start with banks failing. It will start with something far quieter and far more dangerous, a loss of trust. And by the end of this video, you'll understand why that makes it worse than 2008. Here's the truth most people never hear. 2008 was a mechanical failure. This one is psychological. And systems break much faster when belief disappears. Section 1. The hidden truth behind the problem. Most people misunderstand how economic crises actually begin. They think crashes start when something breaks. In reality, crashes start when people stop believing things will work tomorrow. In 2008, Americans trusted the system right up until it collapsed. They believed their jobs were safe. They believed their banks were solid. They believed housing prices couldn't fall nationwide. Then reality hit all at once. This time is different. Today, Americans don't trust the system before anything officially breaks. That's the hidden shift no headline captures. You can see it everywhere, but only if you know where to look. Section 2. What the system actually does behind the scenes. Here's the part almost nobody notices. Modern economies don't run on money. They run on confidence loops. People spend because they believe their income will continue. Businesses invest because they believe demand will hold. Banks lend because they believe borrowers will repay. When that belief weakens, behavior changes instantly, long before data confirms it. Right now, banks are quietly tightening standards, not because defaults have exploded, but because expectations have shifted. Loan demand is falling, deposits are moving faster, cash buffers are rising. None of that shows up as a crisis, but it's the early stage behavior of one. This is how insiders know something is coming before the public does. Section 3. The unexpected consequence for normal Americans. Now here's where it hits normal people, even if they think they're doing fine. Imagine two households earning the same income. One believes prices will stabilize. The other believes prices are unpredictable. The second household saves more, spends less, delays decisions, avoids risk. Multiply that behavior by tens of millions of people. Consumption slows, not because people are broke, but because they're uncertain. That's the trap. Recessions don't require poverty. They require hesitation. And this next part is where the damage compounds. When people slow spending, businesses slow hiring. When hiring slows, wage growth stalls. When wages stall, confidence drops further. A feedback loop forms, quietly. No crash, no panic, just economic gravity. Section 4. The deeper mechanic they never talk about. Here's the part you almost never hear discussed. Institutions are optimized for stability, not trust repair. Once belief erodes, policy tools lose power. Rate cuts don't fix confidence. Stimulus doesn't restore predictability. Positive headlines don't override lived experience. When people feel the rules keep changing, prices up, prices down, taxes shifting, costs jumping, they stop trusting any signal. This is why volatility is more damaging than inflation itself. It trains people to expect instability. And when belief breaks, people don't re-engage quickly. They protect themselves. That's why this shock is worse than 2008. Back then, trust collapsed suddenly, then rebuilt. This time, trust is eroding slowly, and that's harder to reverse. Final takeaway. Here's the real takeaway. The next financial shock won't be defined by collapsing banks or crashing markets. It will be defined by millions of Americans quietly deciding the system doesn't work the way it used to and acting accordingly. When that happens, growth doesn't fall off a cliff, it suffocates. The economy doesn't crash, it stalls. And the people who understand this shift early don't panic, they adapt. Because every economic reset begins the same way, with trust breaking, then being rebuilt under new rules. In the next video, I'll break down who benefits when trust collapses and why it's rarely who people expect.